What if you woke up tomorrow morning and home prices had suddenly crashed 20% overnight? What would you do? Would you run back into the housing market? Would you invest in real estate all of a sudden? That's what we're going to talk about this morning. Welcome to my daily housing crash update. My name is Jason Ferrier. I'm a realtor. I'm an investor outside of Columbus, Ohio. Thank you for joining me today. And let's get started. So that's the question I wanted to pose to you today. What if housing prices, the home prices in your neighborhood, suddenly crashed 20% overnight? What would the reaction be? Not only from you, but from others in the industry and in the marketplace. So here are some things I thought of. Refinances would be tougher, obviously, right? So, and if you can't tell, it's a freezing day here in Ohio. Maybe one of the colder days we've had here lately. But in any case, what would happen to refinances? Would they suddenly plummet? Would you actually be able to refinance a property? I mean, if you think about it and you lose 20% equity in a house, what does that mean? Well, it means that refinances will definitely be tougher. So I would look for refinances to probably dry up more than they already are. And by the way, we're pretending that interest rates stay the same for right now in our little fantasy land. Home flipping would be tougher. It'd be tougher to flip homes, right? As an investor, I can tell you if you're planning to sell a house for 300 grand when you're done with it, and when you go to sell it, it's actually worth 20% less than 300 grand. Oops. Now it's worth, what's that, 240? Your profit is probably gone. So profit is probably stifled big time because of a 20% decline in home prices. I also wrote down mortgage-backed securities. The MBS market, in case you don't know, is basically the massive $11 trillion market that is comprised of all the mortgages that Americans get for their homes. Banks, institutions package those things up and sell them many times to pension funds, 401ks, hedge funds, that type of thing. And so if home prices crash 20% overnight, I would think that the $11 trillion mortgage-backed security market would suffer significantly, right? And with that would come a maybe an implosion in the banking system again. Probably massive job losses. I don't know. It would definitely have far-reaching consequences if it happened overnight. Here are some other questions for you, though. Institutional investors. What would happen if home prices crashed 20% overnight with institutional investors? Would they run back into the housing market? I don't know. I mean, if home prices all of a sudden were cheaper, a lot cheaper, you would think people with money, cash on the sidelines would be ready to deploy it and, buy homes. So that brings me to like one of the bigger questions I wrote down. What would happen to buyers and sellers overall? Would it unlock the housing market? Right now, people are not buying and selling as much as they were over the last, few years and even historically. So would a lot of sellers all of a sudden list their properties if home prices drop 20%, or would it lock up the market even more? If home owners said, shoot, my home is worth 20% less today than it was yesterday, does that mean they go, well, I'm definitely not going to sell now. I'm going to stay put. I'm not going to buy the next house, even if it's cheaper. Or would they list their house saying, shoot, pull the fire alarm, mass selling, time to sell, got to sell, because I don't know what's going to happen with prices, right? Would a bunch of people sell their houses? Maybe a bunch of people sell their second houses? Would a bunch of investors sell their homes as investors? I don't know. But I thought this was an interesting question because a lot of people say, well, interest rates don't matter. I need home prices to be lower. So if you're on the sidelines waiting to purchase, waiting to get into the housing market, waiting to invest in real estate, and home prices drop 20% tomorrow, would you buy? What would you do? If you're a homeowner, what would you do? I'm really curious. I'd love to hear it in the comments below. What would you do if you're like, man, I thought I was, I didn't think I was going to buy this year, but all of a sudden home prices are 20% lower than they were yesterday. Something you should consider and think about is what you would do in that situation, because there's probably a lot of buyers with cash ready to run back into the market and purchase a home, or ready to buy a second, third, fourth, maybe an investment property, right? Maybe there's institutional buyers that would run back into the housing market if things were 20% lower. It's something to think about, because a lot of people have been waiting for a housing market crash, but I don't hear a lot of people say, this is what I would do if prices dropped X amount. I don't hear a lot of people say that. So again, I'm really curious on what you would do if home prices dropped 20%. I can tell you, as an investor, as somebody who invests in real estate, I wouldn't sell my investment properties. I may sell a flip sooner. Like if I'm in the process of flipping a home, I may stop and just sell the thing, right? Because I probably don't have as much room on the back end. But my rentals, I don't think I would sell those necessarily, because prices dropped 20%. Now, the big crunch would come in for somebody like me, because I draw a lot of equity from the rental properties to fix them and maintain them. So as an investor, I need that equity to refi. And if there was less money to refi with, that would certainly put a cash constraint on me as an investor. And I'm sure it would a lot of other investors as well. But the other thing to consider is just the sheer amount of equity that homeowners have right now. The sheer amount is staggering. Average homeowner has 300 grand in equity. Take away 20%, that's 60,000. Now they've got 240 in equity. Now you can only refinance usually 80, 90% of your primary home. If it's an investment property, maybe 70, 75, maybe 80%. So there's still some, you're talking less than 240 grand in equity maybe on the average house. So I think all that combined would not be good for the housing market. It would not be good for the economy. But again, I want to know what you would do if home prices were 20% less. A lot of people say, I would buy if home prices weren't so high. Pretend they're lower. Are you going to run back into the market? I'd love to know. Please comment below. I'd love to know if that's something you would do and how you would function in that environment. It's something to think about. I mean, it is. I mean, it's unrealistic, right, for home prices to drop 20% overnight, but you never know. So sometimes you do, though, right? It's not something that's probably going to happen overnight, but it could happen in 1 year, maybe. It could. Doesn't look like it's going to, but it could. So yeah, that's what I wanted to talk about today on the daily housing crash update. Tell me what you think. What would you do if home prices dropped 20% overnight and you woke up tomorrow, your home was worth 20% less, or the home you were looking at to buy was 20% less? Would you still stay on the sidelines hoping it went down more, or would you act? That's the question. Help me answer it in the comments below. All right. I hope you have a great day. I'll see you tomorrow on the daily housing crash update.